A new earnings season is upon us. Joining us for a preview is Christopher Davis, partner at Hudson Value Partners. Christopher, thank you so much for joining us today. Let's talk about the trajectory and expectation for earnings this season. We are still expected to see growth when it comes to the S&P 500, members of the S&P 500. Where do you lie in terms of your expectations for how much growth we'll see? It's expected to be less than Q3. Where's your view?
Yeah, I think there's going to be a fair amount of dispersion between sectors, Diane. So I think, the areas of the S&P 500 with the biggest earnings growth projections for Q4 are healthcare, financials, technology, communication services. So we'll have to see where those stack up. It's also supposed to be, the inflection point, at least from a consensus point of view, for industrials, for this to be their trough quarter and for things to pick up from there.
Okay. And then when you think about the financials in particular, I know earnings season kicks off officially this Friday, but really it seems like the big focus will be the banks. What are you looking to hear or what are you expecting to see? Is it going to be about what net interest income looks like? What are you looking for from the banks?
Yeah, I think it's going to be a good reporting season for the banks. It's also going to be, a good 2025 for the banks. So I think net interest margins are going to be strong. But I think it's also important to remember that for banks, it's not just higher interest rates that matter, but also having that upward sloping yield curve is really what greases the wheels of finance in general. So for us, we think the commercial banks like Chase, as you're showing on the screen there, are going to do fine. But I think we also want to lean a little bit more towards the the advisory banks, the capital markets focused exchanges, because they're going to be better positioned to capitalize on some of the volatility as well as the capital markets activity. But that's where we're leaning towards for financials in 2025.
And then when you look beyond financials for 2025 and for Q4, what other sectors are you expecting to see strength? What are you looking for in particular from, say, tech or energy?
Yeah, so within technology, we still want to see AI going into action. That's the big thing. I mean, investors, we're very concerned about, are we just seeing all this CapEx spend, all this hardware spend? We want to see seat licenses, we want to see revenue coming in, and we want to see, real technology and things that can be directly tied to those AI pieces and those wins starting to show up. So I think that's what you're going to want to see in the likes of Microsoft. You're going to want to hear about it from Alphabet. I mean, they came out with their quantum chip, which was a big catalyst in December. So we want to hear more about that. So I think that's within big tech. I mean, that's what you're looking to see is, tangible results from the AI spend. Within energy, prices have been a little weaker across the energy patch recently, and with the drill baby drill and that sort of feeling coming from the Trump environment, we're going to have to see, is there going to be more supply? So we'll have to see what happens there.
I want to circle back to tech. The expectation, again, we're expected to see growth in terms of earnings for the S&P 500. The growth trajectory is expected to be more along the lines of just under, say, sub 8%. But within the tech sector, especially with Mag 7, we're expected to see growth north of 20%. Is that your expectation? And what would worry you if we don't see that kind of growth?
We're tech bulls in 2025. We think that we should see growth along those lines. It may not be a straight line, and that 20% within the Mag 7 could be pretty, heavily weighted towards the likes of NVIDIA skewing the numbers a little bit, and Tesla a little bit more challenged within Mag 7. I mean, what would worry us is if you saw the sales take up at something like Microsoft in their Office 365 and their Copilot licenses, if that just really came down, or if you saw some of the GPU and the processing and usage rates among consumers of the NVIDIA chips come down. But we haven't seen any indications that that's the case, and businesses seem to be doing an increasingly good job of trying to figure out how those AI efficiency gains can be achieved.
Let's talk a little bit about Tesla. You just mentioned them. They report at the end of the month. What are your expectations, and is it going to be about, we got those disappointing delivery numbers for the full year. But sometimes for Tesla, it hinges on what Elon says about the future path. And, he's very focused, obviously, on the future and the growth story, especially when it comes to AI and robo-taxis. What is your view? Is it going to be about how much the deliveries and revenue numbers matter, or is it about what the projections are beyond that?
Well, right now he's the most interesting man in the galaxy. So, I mean, people are going to be listening to that call, perhaps even more so than they were before. I mean, he's turned in from being just a, political activist, an activist investor, to now this political investor activist. I think Tesla is still probably the best positioned of any of the legacy automakers or any automaker in the US in terms of EVs. But the stock has had a heck of a run since the November election, and those sales numbers are worrying. I mean, Tesla is always a momentum play. It's not really it's not really my cup of tea and something that I go after. But it's certainly we have to watch, especially with his increasing prominence within the administration and within the national economic and technological agenda that we have. So, gonna have to listen closely, but I would tread carefully.
Okay, tread carefully. One other stock that has had, some analysts have pointed to a melt up, and that's Apple. It's faced a little bit of headwinds recently, and then it had a rare negative outlook from MoffettNathanson recently, who downgraded their view on Apple, and they pointed to, some of the headwinds that Apple has been facing, especially with regard to Apple Intelligence. Of course, there's been some concern about demand in China. What are you looking for when it comes to their quarterly report card?
Yeah, well, it's also going to be the first Apple call without Luca, with the new CFO. So we're going to want to listen to that closely and to see if the new CFO is going to put a little bit of a different spin on things. Sales numbers with Apple are always big. I think the Apple Intelligence is really a phased rollout. So we're just seeing the tip of the iceberg there. And I think it's been a pretty strong offering about something that consumers can really use. They are the leader in consumer focused, not, business to business focused AI. And we want to see about the uptake. It's a little worrying that we saw some hefty incentives from some of the wireless carriers in the fourth quarter. But overall, from the MasterCard spending data, electronics were up 3.7% in terms of sales in this holiday season. And I think Apple gets more than their fair share of that going forward.
And speaking of the consumer, what is your expectation when it comes to the consumer-facing companies beyond Apple and, say, these tech companies?
Yeah, I think the consumer is broadly in good shape. The problem, and that's really quite tough when analyzing it, is that we're in a very stratified economy in the U.S. The people, the middle class, upper middle class, and above, which drive a lot of the spending, are doing quite well. They're beneficiaries from asset price inflation, and they're hurt less by it, and they're definitely out there spending. The largest cohort and some of the less economically advantaged people in the U.S. are still crushed very much by inflation. So that's why you see these big yawning gaps between the likes of, say, Dollar Tree and Dollar General and firms that we own like Richemont within the luxury space. So it's a very stratified environment, but I think overall it's a good time for the consumer.
Yeah, it'd be interesting to see if Walmart continues to be the winner this year, especially if we see an uptick in inflation. That will certainly be a metric we'll be watching. Christopher Davis with insight on the next earnings season, a partner at Hudson Value Partners. Thank you so much for joining us today.
My pleasure, Diane. Thank you.